I get it. When you think of dividend stocks, you do not often think of information technology. But that is exactly where we are going to park some time today. Today we're talking about perhaps the best tech dividend stock you've never heard of. And yet, you interact with this business every single day without realizing it. There are a lot of information technology stocks out there that happen to pay dividends. But how many of them are actually quality dividend stocks? And for that matter, what is a quality dividend stock? Here's how I define it. Number one, a stock has to have a solid track record of paying dividends every single year and increasing the dividend every year. For me, I like to see at least 10 years of consecutive dividend growth. Second, I like that dividend to be raised by an amount that is competitive with the long-term inflation rate. We know inflation right now is insane. 8, 9, 10% year over year. However, long-term we've seen around 2 to 4%. I personally like to look at dividend stocks with at least a 7% dividend growth rate on the 1, 3, 5, and past 10 years. Number 3, I want a dividend stock to have a solid balance sheet with plenty of cash flow to pay the dividend. The way I measure this is by looking at the payout ratio based on free cash flow instead of net income, meaning the percentage of dividends paid compared to the amount of free cash flow available. I like this ratio to be less than 75%, and if it's less than 50%, that is awesome. And lastly, I don't want to buy a stock that's got a meaningful dividend yield. For me, that means at least paying 3%. Though for me personally, I will drop below 3% if the dividend stock has a really solid options chain with opportunities for covered calls. This is my monthly dividend stock spreadsheet. It tracks all the dividend stocks that I'm paying dividends at least for 5 consecutive years. That is over 600 different dividend stocks. If you want access to this monthly dividend stock spreadsheet and all the spreadsheets I use on the channel, and furthermore, if you want to be part of the Average Joe Discord community where you have access to other Average Joe dividend investors, go over your questions, concerns, ask others to give a critique on your own portfolio, get direct access to me, and everything in between, you have to join the Average Joe Patreon community. There's a link down in the description below. There are 53 different information technology dividend stocks that have been paying dividends for at least 5 consecutive years. Let's apply some of the quality dividend stock metrics we just spoke about and see how we can narrow this list down. If we narrow the list to only dividend stocks with a history of paying dividends for 10 plus years, now we're left with a list of not 53, but only 30 dividend stocks. Furthermore, we've got our dividend growth rates here. Let's apply our metrics to see at least 7% on the 1, 3, 5, and 10 years. Now we're only left with 19 different dividend stocks. Furthermore, if we filter out based on the payout ratio based on free cash flow over the past year and trailing 12 months to being less than 75%, now we're left with only 17 dividend stocks. Some of these stocks you've definitely heard of, such as MasterCard, Intuit, Visa, Microsoft, Motorola, Accenture, Automatic Data Processing or ADP, Oracle. But one I want to really focus on here is one that you've probably never heard of, and that is Corning Incorporated. Ticker symbol GLW. This dividend stock has been paying consecutive and increasing dividends now for 12 consecutive years. I really like businesses that exist out there in the real world and make real products that real people use. No metaverses here, no digital products, etc. These are the types of businesses that survive and thrive in the real world when times get tough. All right, so we're on the company's website here. This is a stock that I had no idea what this business did. I came across it by looking deeper into my own dividend stock spreadsheet in the information technology sector. So Corning has 5 separate business segments that they focus on. Number 1, display technologies. Number 2, optical communications. Number 3, environmental technologies. Number 4, specialty materials. And number 5, life sciences. Within their display technologies business segment, they manufacture glass substrates for liquid crystal displays or LCDs that are used primarily in LCD TVs, notebook computers, and flat panel desktop monitors. In their optical communications business segment, the focus is on optical fibers. In fact, Corning invented the world's first low-loss optical fiber in 1970. Within the environmental technologies business segment, they manufacture ceramic substrates and filter products for emissions control and mobile applications. In the early 1970s, they developed an economical, high-performance cellular ceramic substrate that is now standard in catalytic converters in vehicles worldwide. In their specialty materials business segment, they operate in a wide variety of commercial and industrial markets that include display optics and components, semiconductor optics components, aerospace and defense, astronomy, ophthalmic products, whatever that means, telecommunications components, and cover glass that is optimized for display devices. In other words, that cell phone that's in your pocket on your hand right now, probably has glass that was developed by Corning. And lastly, their life sciences business segment. In this segment, they work with researchers and drug manufacturers seeking to increase efficiencies, reduce costs, and compress timelines. Using unique expertise in the fields of material science, polymer surface science, cell culture, and biology, they provide innovative solutions that improve productivity and enable breakthrough research. And if you look at their annual report here, you'll notice that their net sales by segment is very diversified. Yes, they have a little bit more weight in display technologies and optical communications. However, they have a significant amount of net sales across all of their major business segments. In my mind, this makes this dividend stock very flexible and able to shift their business priorities depending on what's happening in the markets. Back to our monthly dividend stock spreadsheet, Corning Incorporated has a 1, 3, 5, and 10-year dividend growth rate of 10.9%, 10.3%, 12%, and 14%. What you should take away from this is, despite the fact that you have insane inflation right now on all of your daily products, this dividend stock raises its dividend every year on average at a rate higher than the current inflation rate. What this means is inflation is not eating into the dividend you're receiving, which is increasing every single year with this company. You'll also notice that its historical 5-year average dividend yield is 2.69%, but it's currently yielding 3.55%, which is effectively a 24% discount. Furthermore, you can see here the dividend payout ratio over the past year is 49%, which is really great. And then despite the fact of all the market turmoil we've seen, it's only been inflated to 63% over the trailing 12 months. This gives me a lot of confidence that this dividend is not only safe still, but it has the room to continue to grow in the future. We're on Morningstar's website here where we can take a look here at that free cash flow that I have. You can go back even further than just the trailing 12 months of the last full year. You can see that their free cash flow per share has been very consistent. It dipped a little bit in 2019. However, it has been otherwise steady every other year. At a price of around $30.46 per share, it only requires a $3,000 investment to get to 100 shares and to be able to sell covered calls. We're here in the option chain on the Fidelity website for Corning. And just FYI, for those of you that are looking to potentially add this dividend stock to your portfolio, it does go ex-dividend on November 17th. So if you want to buy before the 17th, and you can capture the dividend that will be paid out on December 16th in the amount of 27 cents per share. One thing I like about Corning, and one thing that's a big requirement for me for the most part on the dividend stocks that I own that I want to sell covered calls, is that it does have the ability to sell dividends every single week. If you wanted to sell covered calls, and let's say you wanted to keep it super conservative, let's go to the December 2nd expiration date, meaning essentially a 30-day expiration, 31 days, currently priced at $32 per share. You can get $20, $30, $40 here to sell a covered call on this dividend stock. I wouldn't call this lucrative by any means, but what it does do, if you sell covered calls, is it increases the amount of cash flow and it changes essentially the overall yield from the stock. Oftentimes, without trying very hard and by selling out of the money covered calls, you have the ability to double or triple the cash flow you get from a dividend stock every year. The truth is, many of us are light on information technology dividend stocks unless you own Apple or Microsoft, and I know a lot of people do. The truth is, it's hard to find great yields and find dividend stocks in the information technology space. And the truth is here, there aren't very many quality dividend stocks. However, if you're looking for a new information technology dividend stock, I highly recommend taking a closer look at Corning Incorporated. Hopefully you found some value to this video. Make sure to leave your 2 cents down in the comments below. And again, if you're interested in joining the Average Joe Patreon community, check out the link down in the description below. Tons of value over there for new and up and coming dividend investors. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.